Good evening, guys. Kenneth Tortoise Capital, nightly strategy podcast for October 29th, 2024. So this quick look at SPY on a 3 minute. Just the kind of day it was today. Still very quiet, narrow range. Here was yesterday's close. Here was the open. You had about 10 or 12 minutes sell off. You get the bottoming out of the RL10. There's your PSAR flip. That's the morning hook. There is a 1, 2, 3 entry right about here. So if you just put your standard risk box to the bottom of the PSAR flip, you get that kind of standard risk, which is about $1. So it's 1/4% standard risk. And price stays north of the intraday VWAP all day. So not so bad. So really the ideal entry to me is like as it crosses out of the dragon and flips the PSAR with price. Then I think you get this. I would typically be getting out here, probably trying to re-enter here, scratching here, re-entering here and getting a micro. That's if I'm trading on the 3 minutes with an R5. I'm sorry, with an R10 size. The trades I did take today, though, take a look at. So this is EWW, Mexico. And we're on a 10 minute. Here's yesterday's close. Here's a gap down. Here's the opening range 10. So typically I'm looking for a breakout in either direction and then using some form of standard risk. Now, the second 10-minute bar was an inside bar, so it's not breaking out and running, so I can be a little more judicious in how I take my entry. So the next bar, however, does give me the OR10 breakout, so I can take that one. It comes back and closes here, but then opens and then continues up to here. So after 20 minutes in the trade, we're already this much to the good. So that's about a plus 0.7. So that's a good position to be in. Plus, now we're looking at this was yesterday's resistance. So it has to work hard to get above that. And with the nature of the lack of follow throughs that we've been having for the last month, I wouldn't be offended if you had a quick trigger to get out of this thing. I let it stay too long. I think I should have been able to get at least a no lose plus dinner for two. So I was slow on that exit. Now it's dancing around the VWAP but holds. And there's a 1, 2, 3 re-entry, almost at the same price level. That's a micro loss. And so now, after 2 losses in a row, it's below the VWAP. The RL10 is rolled over. The Dragon's rolled over. The Bollinger Band mean is rolling over. So I stop and reverse there and get short. And we got some intraday weakness and close near the end of the day for about 2.5 R net. So this one trade here pays for this little micro loss, and that's a scratch. So this net's about 2.5. We'll take that. Now notice just one trade out of 3 is a winner, but what matters is your average gains and your net. They all look the same leaving the station. This is DIA, the Dow 30. This is also 10-minute. So here's yesterday's close. Here's a gap down. So this one's in play. There's my OR3. I'm sorry, my OR10. The second bar is up. Third bar breaks out. So we're going to be long from there. And what I'm looking on that is just to return to yesterday's VWAP. That would be good as the first target. Gets there and then reverses. Now it's chopping, comes back below the Bollinger Band mean. So the upside is over. And the RL10 rolls over. So this is a natural place to lock in +1. Standard trade. Chop, chop, chop. There's been so little follow through, I just stay out of it. So we get about 3.5 for the day on those two standard trades. We'll take a look at the traders. Jonathan uploads one for us, fresh out of our coaching concept. And here he's also trading DIA. He's actually trading it with YM, the E-mini. And there's the morning hook. There's his entry. We talked about this one last night. So the timeliness on this one is awesome. And now notice that in the futures, the overnight trade was trading down here anyway, whereas the previous day in DIA closed up here. So there was a big net gap. But if you're watching the futures, you just realize this is stable and steady. It opens and then starts crossing the dragon and crossing the Bollinger Band mean. That's a natural long. It gets through when it gets through the VWAP. That's a positive sign. I might have even added a second position after this little consolidation here, and then it takes off. I might have tried to add a second position here because if my stop is here, then I'm holding close to 2-1. So I might consider a second position there. He gets the next leg up. It peaks. The R10 rolls over. He takes it on a 1-2 exit for 3.5, just as it's approaching the skin of the dragon. He tries this one, I believe. And then, yeah, that doesn't follow through. So he cuts it quick. Now, later on, what I just want to show is now I don't mind you not trading this because there's been so little follow through. But when you have that really nice, strong run and you're this far from the VWAP, and then you have a high, a lower high, a second lower high. When it comes through the dragon that time, we might have tried to play for that with a little wrist box, like just to the top of the dragon or to the PSAR. Either one of those is fine. And then you would get this trade. And then after it reverses, probably exiting when it comes back across the VWAP. So really good work from Jonathan there. Doing a great job in the coaching program. If you're interested in the coaching program, you can still lock in this year's prices before Thanksgiving. The next cohort's going to start in January, and I'll honor this year's prices. It's going to go up in January. You might want to you can register early and start reviewing the materials before the coaching sessions start. What I'm actually thinking of doing is giving a more relaxed form of the coaching where you want to just audit the coaching sessions. So I'm thinking of doing that with less at a lower price point to allow people to study until they're ready for the formal upgraded coaching. So be watching for an announcement on that this year. I just decided to do that today. So I'll be offering that pretty soon. Now, here we go with the daily trading plan, prepare, execute, and assess. Prepare like your life depends on it, because it does. And although I spend, most of my time in here on the daily is doing the intraday trading, there is connections to both swing trading and position trading in the way that we trade. And when we're doing core and turbo with the swing in the day, we're actually combining signs, signals, and information between those two different time periods. Same thing when we're looking at longer term blended monthly rebalancing and swing trading. In that case, this is the core and this is the turbo. And then we have one standard way of managing all of the positions that are within the meta portfolio. Whether we're looking at monthly charts or 1 minute charts, the patterns are fractal and the interpretation is the same, and the targets are the same. This is the market 150. We're right at that all-time high, waiting for the election to finally get here. Market health check. This is the last 30 days. We're consolidating the moving anchored VWAPs. Here's your 10-day VWAP, the 3-day VWAP, the 5-day VWAP, all nice, tightly compressed here. It's a short distance to a breakout above the all-time high. It's also halfway down to the 10-day low, which was here. If that breaks, then the next target is here, down around 570. So there are measured steps to the upside and to the downside. This is a market that's in a holding pattern right now. The 30-minute, you see how sideways and choppy it was today, but with a slight upward tilt. We're still bullish normal, mostly overbought. Stable price action at the top of the river. One buy on dip signal in emerging markets. In the Dow tactical summary, some trivial weakness in Microsoft and Coca-Cola. In the ETFs, strength in gold for the defensive hedge, otherwise micro weakness. The narrow range of the day really produces a lot of auto framers. So the ones that just automatically appeal to me by name are the ones that funds have to buy: Coca-Cola, 3M, and Merck. There's your treasuries. Home Depot, everybody's got to own that, and that's 3-1. McDonald's, they're weathering the storm of the E. coli, 2.7-1. So a lot of goodies. And when you have both small caps and the diamonds ready to go, that's a market that is compressed and just waiting to explode. Just waiting. A few squeezes. Disney, Caterpillar. This is the TC2000 auto framer with all the key pricing action. Everything above this horizontal red line is better than 2-1 on the reward to risk ratio, which is computed as described over here. Fall and winter, there's a mind split right now between the leaders and the laggards. Market in a holding pattern. Much more weakness than upside breakouts. The sell-off in Coke and Home Depot look like opportunities to me. The intraday trading value list are those that combine large daily ranges and the consistency of daily moves with a high frog quality number. When you multiply those two together, you get the trading value ratio, and then we rank them best to least on those. I track more than 40. I just showed my top 40 right here based on the trading value. Tesla, Nvidia, marijuana, Devon Energy. Awesome. Market in a holding pattern remains there, ready to break in either direction, and nothing different to report. We're just standing by and collecting bank. Right, take good care. We shall see you tomorrow.